method is least square method. Last method is least square method. So here there is a small mathematical equation. Small mathematical equation. That is also very simple equation. So you can see. So you know that total cost is equals to variable cost plus fixed cost. Correct? Right. So that means total cost is equals to variable cost per unit. Variable cost per unit into number of units. Variable cost per unit into number of units will be total variable cost plus fixed cost. Correct? Right. So total cost will be denoted with Y. Total cost will be denoted with Y. Variable cost per unit. Variable cost per unit will be denoted with M. Per unit variable cost will be denoted with M. Number of units will be denoted with X. Number of units will be denoted with X. Fixed cost will be denoted with C. Constant. So this is an equation. This is an equation. Y is equals to mx plus c. Y is total cost. So you know this, no? Total cost is equals to fixed cost plus variable cost. So total cost is equals to variable cost per unit into number of units plus fixed cost. So here the total cost is denoted by Y. Next, variable cost per unit is denoted by M. Number of units are denoted by X. Fixed cost C. Okay, right. So we have also using this equation, we can derive fixed cost or variable cost. Fixed cost and variable cost. How we will see? See here. The question here is capacity percentage, 60% and 80%. Two levels of activities. That means operating at 60%, 80%. Simply speaking, let's say our capacity is maximum capacity is 10,000 units. 60% capacity means we produce 6,000 units. 80% capacity means we produce. That means level of production changed. Level of activity changed. Okay. Right. Change in the level of activity. There, volume labor hours or X. Number of hours. Volume labor hours or X are 150 and 80% capacity 200. 80% capacity 200. Semi-variable expenses, that means total cost is 1200, 1275. 1200 and 1275. So now we have to solve for variable cost and fixed cost. So you know the values now? You just tell me what are the values? What are the values? Capacity is 60%, 80%. Okay. Here the labor hours will be 150 labor hours. Here 200 labor hours. Here the cost is semi-variable cost or total cost is 1200, 1275. Correct? 1200 and 1200. Labor hours per unit. This is labor hours per unit. Number of labor hours. Number of laborers per unit. What is given? I just wanted to know what is this? Huh? See here. Number of laborers. Volume on laborers. Number of laborers. That means this is X. Okay, X. M means what? M means what? X is number of units. X is equals to per unit. Sorry, M is equals to per unit. Okay, right. So per unit means per labor. M will be per. Here labor we are talking about. That means M will be per labor. Okay, right. So now the equation is Y is equals to mx plus c. Here we'll form two equations. So equation 1, so which is equation 1. So equation 1 will be y means what? Total cost. Total cost is equals to 1200. Next, m means what? Per unit cost. So per unit cost we don't know. So that means per labor hour cost we don't know. So m. So m is what? M is cost per labor hour. X is what? Number of labor hours. Okay, na? Right. So m we don't know. X we know. X is 150 plus what is the fixed cost? Fixed cost also we don't know, which is C. Correct? Is this equation correct? So that means 1200 is equals to 150m plus C. Correct? This is what equation 1. Right. Same way equation 2. So which is 1275 is equals to m into what? M into what? Number of laborers 200 plus constant C. This is what is equation 2. Right? So subtract equation 1 from 2. Subtract equation 1 from 2. Then what will happen? 200m plus C minus 150m plus C is equals to 1275 minus 1250. Correct? Sorry, 1200. Correct? Equation 2 minus 1. 200m plus C minus 150m plus C is equals to 1275 minus 1200. So that means 200m minus 150m plus C minus C. Correct? Okay, CC cancel. 50m will be there. Is equals to how much? 75. So that means m is equals to 75 by 50. Correct? Which is equals to 1.5. 1.5 per labor hour. 1.5 per labor. Okay. So right. So substitute m in equation 1. What is equation 1? 1200 is equals to 150 into 1.5 plus C. So that means C is equals to 1200 minus how much? 1.5 into 150, which is equals to 225. Correct? So which is C is equals to, that means C is equals to 975. Correct? Okay. So you got C 975. M you got 1.5 per labor hour. Okay. Right. So now, so what will be the variable cost at 60% capacity? Variable cost at 60% capacity, which is mx. What is m? 1.5 into x 100 hours. 150. 150 hours. 150 hours means 225. 225 will be the labor cost or variable cost. 225 will be the variable cost. 975 will be the fixed cost. Correct? Total, how much we are getting? 12 will be the total cost. Right? In the same way, next, in the next equation, 80%. At 80% capacity, mx is equals to 1.5 into 200, which is equals to 300. So variable cost is equals to 300 plus 975. Fixed cost 975. Total you are getting 1275. Here also 975, which you are getting. Correct? So simple equation, y is equals to mx plus c. So that will be substituted and so that's it. Okay, so how you are getting that equation? How you derive that equation? Simple formula. What is that? Total cost is equals to fixed cost plus variable cost. Variable cost means variable cost per unit into number of units. So here variable cost per unit. Here in this problem, variable cost per labor into number of labors plus fixed cost. So you arrived at per labor hour cost. That is M. M you have arrived. So you substituted a M in both the equations. Then equation 2 minus 1. Then you arrived at M. Okay, per labor hour cost. Later on you substitute M. Then we arrive at variable cost. So variable cost. Okay. Right. So this is how you solve the equation and you will get variable cost and fixed cost. Okay. Right. So this is what is least square method for segregation of fixed cost into variable cost. You understood? You understand this now? So right, we have seen segregation of variable cost into fixed cost. So graph we have seen. Next, high low method. We have seen next. Analytical method we have seen. Next, comparison by okay by period or level of activity method. Next, least square method next. Okay, so these are the 5 methods. So in the high low method, what we are doing when we will use that, when the page value is given, then we will use that. Okay. Next case, analytical method. It is generally given by the expert. A percentage of degree of variability will be given by the expert. Based on that, you will find the variable cost and fixed cost. That is analytical method. And the next one is comparison by period. Whenever the production level is given, number of units is given, then you will use this. So there you will find variable cost. How you will find variable cost? That per unit. Per unit variable cost can be found. How you will find out? Change in the output divided by, sorry, change in the amount divided by change in the output. Output means change in the units produced. Okay, then you will get variable cost per unit. So then you can get variable cost per unit into number of units produced. Then you will get variable cost. If you get variable cost will be subtracted from total cost. Then you will get fixed cost. So this is how we will find variable cost and fixed cost. Next, least square method. There you will use mathematical equation. What is the equation? Total cost is equals to variable cost plus fixed cost. Variable cost means variable cost per unit into number of units plus fixed cost. So which is equivalent to y is equal to mx plus c. Y is total cost. It means per unit cost. X is number of units. C is constant or fixed cost. Okay. By solving the equations, you will get. So how can you solve equation 2 minus 1 minus 2 like this we can solve. Since it is a linear equation. So even there is no squares also. If there are squares, then we have to solve the equation. Okay, here it is a very linear equation. So in linear equation, simple equation 2 minus 1, you will get the answer. Okay, right. So this is what the see. Now we are in the concept of classification of cost. Correct? Classification of cost. So classification of cost by nature or element. Classification of cost by nature or element. What are the costs there? Material, labor. In that, indirect material, indirect labor, indirect expenses will be called as overheads. Overheads means overheads will be subdivided into next distribution of. Okay. So next we have seen by functions. By functions, factory overheads or production overheads or manufacturing overheads. Manufacturing cost. So factory cost or works cost or manufacturing cost or production cost. Next, administration cost. Next, selling cost. Next, distribution cost. Next, research and development cost. Okay, so this is by functions. Okay, and this direct material, direct labor, direct expenses will be together called as per unit cost. In the cost sheet, you will see that. Next, factory cost. Next, selling and distribution. Next, administration. Next, selling and distribution cost. Okay, great. Next what we are saying by variability or behavior. So behavior means what? How the fixed cost will behave. What is the character? It is constant for any level of activity. What is the character of variable cost or behavior of variable cost? Per unit cost will be same, will not change. For any level of activity, per unit cost will not change. So whenever the activity level increases, variable cost increases. Total variable cost will increase. Per unit cost will be same. Total variable cost will increase. So that is what the nature is. Next is semi-variable cost, which is neither fixed cost nor variable cost. That is semi-variable cost. Now we have methods for segregation of variable cost and fixed cost. So out of the four methods are important. What are the where it will be used whenever the sales volume is given, sales value is given. Okay, compared to cost, sales value is given. Obviously, cost shall be given. We have to segregate cost or not. Cost shall be given. So corresponding to cost, what is given? Sales value is given. Volume is given. Volume. Okay, if the sales value is given, high-low method. In high-low method, difference in the cost divided by difference in the sales value. Then you get degree of variability or percentage of variability. So that percentage will be applied in what? Sales volume, sales value. So it may be high value or it may be low value, any value. Another way of what you will get? Variable cost. From the total cost, you will know variable cost. Then you will get fixed cost. So you apply fixed cost. Next variable cost can be set. Okay, next analytical. So in this analytical method, experts opinion will be taken. So degree of variability will be suggested. So based on that, you will fix the variable cost and fix it. Next, comparison. So comparison by period. So what is that? So there is a formula. Change in the amount of change in production units. Then per unit variable cost will be coming. Okay. So variable cost, total variable cost will be found. There the total cost will be fixed cost will be. Lastly, we have least square method, which is a linear equation. Y is equals to mx plus y is equals to total cost, m is equals to number of unit, x is equals to number of unit, m is equals to per unit cost, plus c is equals to cost. Okay, so you will get two equations. Solving the two equations, you will get variable cost per unit, variable cost, fixed cost. Everything will be coming there. Okay, great. So now we are segregating the cost based on controllability. Based on controllability. Controllability means so the manager can control the cost or not, whether it is in the hands of the management or not, manager or not. So that is what is called controllability. Okay, right. So cost can be controlled, that can be controlled typically by the cost, profit or investment center manager is called controllable cost. So first of all, cost center, profit center, investment center are there now that we will discuss in the topic called responsibility centers. We will discuss later. Okay, right. So anyway, manager can control the cost, then it is controllable cost. Manager cannot control it, it is uncontrollable cost. Okay, let's say this branch is there. This branch is there. So branch rent is there. Okay, here one branch in charge is there. Let's branch in charge is there. So rent can be controlled by the branch in charge. This is an administrative thing. Here management will come to this place. They will see this place. They are feeling that this is suitable for us, for our business. So that's why they have selected this place. They have fixed the rent, then rent. So whenever there is a need for the payment of the rent, they will take. Okay, here there is an employee who is working here. So he is responsible for the operations. He is responsible for other operational costs. Okay, light repair is there. Electricity bill, higher bill or lower bill is there. Or a camera something is there. Okay, so light bills he can choose, like or he can control. So those costs are those operations he can control. So what about the rent? It is already prefixed. It is already management decision. It is not in his hands. So the controllable costs are the costs which are in the hands of the manager, who is there in the particular branch, who is there in the particular center. That is what is called controllable costs. So which are not controlled, not in the hands of the manager of the particular branch, are uncontrolled. Example, rent. Electricity is there. It is in the control of the branch itself. Rent is there, it is not on the cost, but not in the hands of the manager, or the local manager. Right? So, controllable costs incurred in a particular responsibility center can be influenced by the action of the manager heading that responsibility center. Responsibility center means for the time being, you can treat it as a branch. Responsibility center means a branch. Okay. For example, direct costs comprising direct labor, direct material, direct expenses, and some of the overheads are generally controlled by the shop floor supervisor or the factory manager. So, direct material, direct labor, direct expenses will be controlled by the production manager. Production manager. Accountant salary in the office, manager salary in the office, CEO salary in the office cannot be controlled by the production manager. Correct? Like this. Next, uncontrollable costs. Costs which cannot be influenced by the action of the specified manager of the undertaking, known as uncontrollable costs. For example, expenditure incurred by say the tool room is controlled by the foreman in charge of that section. But the share of the tool room expenditure will be apportioned to the machine shop is not controlled by the machine shop foreman. Okay, foreman means what? He is a supervisor. He is a supervisor, generally technician. Okay. So he is in the control, he is having tools in his hand. Tools in his hand. Okay. The usage of the tools will be in his control. But the apportionment of the tools cost to the appropriate cost of the objects is not in his hands. It is not controlled. Okay. So simple example, production manager cannot control the salary of the finance manager or the accountant. So that is uncontrollable cost. So distinction between controllable cost and uncontrollable cost. Distinction between it is not very prominent and it's sometimes left to the individual judgment whether it is controllable or uncontrollable. So a thin line of difference will be there, it will be left unjudged sometimes. So in fact, no cost is uncontrollable. So it is only in relation to a particular individual. That means what? With respect to branch manager, it is uncontrollable. Rent is controllable only. But with respect to particular branch manager, it is uncontrollable. CEO salary can be controllable to what? To managing director or the board of directors, not to the production manager. So all the costs are controllable only, but when compared to a particular individual manager, specified manager, these are uncontrollable. Okay. Next, by based on the normality, costs are segregated into normal cost and abnormal cost. Based on the normal cost, abnormal cost. So normal cost, normal cost, abnormal cost. Normal cost, simply normal loss is there, abnormal loss is there. You know that. Normal loss is there, abnormal loss is there. So normal loss means what? It is a natural loss during the production process or during the transportation process or during the purchase process. There will be some preparation. There will be some loss, which is quite common. Sometimes there is the loading and unloading activity of X. Naturally, when you load a lorry of X, okay, when you load a lorry of X, you are loading 100 copies or 200 copies. Out of that one copy will be broken. It is very natural. While handling copies, it is so obvious. Okay, so that is what is called normal cost. That is what is called normal cost. So whatever the loss incurred normally, that cost can be charged on the products which is saved. Let's say 1000 units are there. 1000 units you purchase for 10,000 rupees. 1000 units are there. That means each unit will be rupees 10. Okay. So you lost 10 units. Normal losses 10 units. Okay. Normal losses 10 units. Now the cost per unit will be total cost is 10,000 divided by 990. How much? 10.10 will be your cost. Correct? 10.10. Ultimately, you are having 990 units only. From that 990 units only, you have to recover the entire cost of 10,000. This is normal. Okay. Now, let's say you are transporting this 1000 units. You lost 10 units. That's why 990 units saved. Okay. Right. So this is an overload to a truck. Actually, the truck capacity is 600 units only, but 990 units are being kept. Okay. So the confiscation of goods happened. Confiscation means what? police interrupted the vehicle, okay, interrupted the vehicle and confiscated the detained the vehicle. So a penalty of 10,000 rupees charged. 10,000 rupees charged. So totally what is the material cost now? What is the material cost now? 10.10 only your material cost. It cannot be 20 rupees. Or it cannot be more than that. So whatever the normal cost, sorry, abnormal cost, okay, abnormal loss you are incurring, that cannot be charged to the material. That cannot be charged to the material. Let's say X, we are talking about X. Okay, 1000 X are there. Each entry 6 rupees. Each entry 6 rupees. Okay, so 1000 X are 500 X that got damaged due to an accident. Only 500 X got saved. So if you want to sell the 500 X for 12 rupees each means, is it possible? Who will buy? Okay, if you want to charge the normal loss to the material, it can be possible to recover. If you charge the abnormal loss or abnormal cost to the material, it is impossible. It is an uncertain event happening in your hands that will rarely happen. If you want to recover the abnormal cost, it is impossible. It is impossible. Okay, nobody will tolerate it. Okay, right. So it is the cost which is normally incurred at any given level of output under conditions in which what the level of output is normally at. Whatever the level of output it may be, there will be a certain percentage which is nothing but handling loss. The percentage 0.5% handling loss will be there, or 1% handling loss will be there. It is so obvious. Petrol is being transported. Will be moved for loading and unloading. Okay, so naturally some gas will be evaporated. Okay, some volume will be reduced out of 2000 20,000 liters or 10 liters or 20 liters petrol will be evaporated. So like this there will be a loss. So whenever there is an accident, you lost all of it. So in the subsequent loss, if you want to cover the cost, it is not. So that is an abnormal loss which shall be charged to P&L. So that is what is called abnormal cost. Okay, so it is cost which is not normally incurred at a given level of output. It is not normally incurred. It is not a general cost. It is an abnormal cost. It is in a different circumstances. So in the conditions in which that level of output is normally, it is charged to cost in P&L. It is charged to P&L. It is charged to P&L. It is not charged to trading. If it is charged to trading, what we will try to do? What we will try to do? We will try to recover. That means per unit cost will be increased. Right. So normal cost is there no? That will be included in the per unit cost. Abnormal cost is there no? That shall not be included in the per unit. Next, by cost used in the managerial decision making, which is nothing but different costs will be there. So that cost. So according to that basis, according to the usage basis, okay. So there are different costs: predetermined cost, standard cost, marginal cost, estimated cost, differential cost, imputed cost, capitalized cost. Next, product cost, opportunity cost, out of pocket cost, shutdown cost, sunk cost, absolute cost. Next, discretionary cost, period cost, engineered cost, explicit cost, implicit cost. Okay, we have different costs. So what is the predetermined cost? What is a predetermined cost? So which is fixed earlier. So before incurring the cost only, we are fixing an amount. It is nothing but just like what? It is an estimate. It is an estimate cost. A cost which is computed in advance before production or operation starts. Before production, it is not ascertainment of cost. It is fixing the cost. It is estimating the cost. Okay, on the basis of specification of all the factors affecting the cost is known as predetermined cost. On the basis of all the factors affecting the cost. That means if we are making an estimate, that shall be a reasonable estimate. You should consider all the factors into it. Then only you will arrive at a particular cost. That is what is called predetermined cost. Okay, next is standard cost. Standard cost. So standard cost is a predetermined cost only. It is also a predetermined cost only. but which is calculated from the management's expected standard or efficient operations. Expected standards are efficient operations. So it is a standard cost. That means it is like, we have taken the example just 10k transportation cost. That is a standard cost. That means we are putting a target. Standard cost means we are putting a target. Estimated cost is different from standard. Estimated on a reasonable basis, we are estimating. We are estimating the cost. Standard means no, it is not actual. Standard is not actual. Standard means this is the cost which we need to achieve. We are putting it as a target. We are putting it as a target. Okay, so this is what standard. Let's say, so standard cost means, so for procuring the raw materials, or placing the order, or for the transportation, this shall be the amount we should meet. So more than that, we cannot incur. Now that is a standard cost, that is target cost. Okay, which is calculated from the management's expected standard. Okay, so this is even in the uses of the material also, there will be a standard. In the uses of the material also, there will be a standard. So that means 70% yield shall be coming out of this material. From process 1 to process 2, you are shifting now. So whenever you are making this process, 70% yield shall be achieved. That is what is a standard. That is what is a standard. So standard cost. Okay, standard or efficient operations and the relevant necessary expenditure. It may be used as a basis for price fixation, that means target, and for cost per product through the variance analysis. How variance analysis? You put the standard target. Okay, there is an actual compare. Variance will be coming. So you analyze the variance. Where is the value? Right. Next, marginal cost. Marginal cost means, see here, the amount at any given volume of output by which aggregate cost increases if the volume of the output is increased or decreased by volume. That means if there is a change in the volume, what is the change in the cost? What is the change in the cost? That is what is called marginal cost. That to per unit level you have to see. If you are producing 10,000 units, okay, unit cost is only 1. If you are producing 15,000 units, unit cost is rupee 0.95. So 0.05 is the marginal cost. Okay, whenever there is a change in the level of activity, what is the change in the per unit cost, which is called marginal cost. Next, estimated cost. Estimated cost is a prospective cost. Okay, since this refers to the prediction of cost, it is nothing but just like budget. Okay, just like budget. So estimated cost is expected cost of a manufacture equation, often in terms of unit of the product, computed on the basis of information available in advance of actual production or purchase. Estimate costs are prospective costs since they refers to the prediction of the cost. Okay, next, differential cost. So differential cost means what? It may be an incremental cost or decremental cost. Incremental cost or decremental cost. That means volume increased, what is the cost? Volume decreased, what is the cost? That is what is called differential cost. At 10,000 units produced, what is the cost? 11,000 units are produced, what is the cost? Volume is decreased, 9,000 units, what is the cost? That is what is called differential cost. Next, imputed cost. Imputed cost or notional cost. Notional cost means what? It is not actually incurred. It is not actually incurred. That means there is no cash outflow. There is no cash outflow. Here there is no cash outflow. This is notional cost. So which does not involve any cash outflow. So interest on capital is there. Interest on capital is there. Capital means what? What is the investment which we have to? On that there will be an interest. There will not be any interest because we are not investing elsewhere. We are investing in our business only. So that's why there will not be any interest. But it shall be considered. It shall be considered. Why it shall be considered? In order to compare our performance. See, let's say I want to invest in my business. Okay. So if I am doing business means lot of activity is being done. Correct? So I have to take a particular piece of land, I have to build something, I have to put material, I have to put labor, I have to go for marketing, I have to bring the customers. So a lot of things I have to handle. Ultimately I will get something. Okay now? Right. So these 10 lakh rupees Straight away I am going to bank and depositing FD. I am getting an interest of 7%. Okay, so that 7% is really matter for comparison or not. So simply sitting without doing anything, I am getting 7%. After doing all this activity, what I am getting, that has to be compared with this one. That has to be. So that is what is called imputed cost or notional cost, which is not a cash outflow actually. That interest we are not paying. That interest we are not paying. So that is an imputed cost. So similarly, it is similar to opportunity cost. What we are losing. What we are losing. Next, capitalized cost. Capitalized cost means what? Which is nothing but capital expenditure. What we have invested in plant machinery, what we have invested in buildings, what we have invested in civil works, what we have invested in infrastructure. Okay, what we have invested in other in office administration or sorry, office infrastructure. So that is called capital expenditure. So firstly it will be initial outflow, outflow will be there, cash outflow will be there. Later on what we will do? Depreciation or amortization will. What is depreciation? Impairment of the assets. Okay, value of the assets. Approximately, there is no life of the assets. You will say 10% of the assets value will be credited to PSL, debited to PAT. Which is called capitalized cost. Which is generally capitalized cost means what? Incurred in plant machinery, incurred in factory, incurred in building, incurred in land. That is what is capitalized cost. So capitalized cost will be generally amortized or depreciated. Okay, so depreciation will be charged to me. Next, product cost. Product cost. So these are the costs which are associated with the purchase and sale of goods. Purchase and sale of goods. In case merchandise inventory, that means merchandise inventory means what? Trading. Merchandise inventory means what? So in trading, so the cost associated with purchase and sale of goods. So in production scenario, such costs are associated with acquisition and conversion of material and all other manufacturing inputs into finished product for sale. So simply it is nothing but raw material cost, production cost, right? Here under marginal costing, variable manufacturing cost, and under absorption costing, total manufacturing cost, variable and fixed cost should inventory. So these will be discussed later. This point you will understand later. So what is marginal costing, what is absorption costing, that we have to see for this point. Okay, next opportunity cost. Opportunity cost means what we are sacrificing. Sacrificing means what? So we have 10 lakhs of profit. So whether this profit shall be distributed into dividend or it shall be retained in the business and go for a new investment. Okay, so if you are giving it as a dividend, or going for a new investment. So that sacrifice is there. So that sacrifice cost, which is nothing but opportunity cost. So this cost refers to the value of sacrifice made or benefit of opportunity foregone in accepting an alternative course of action. Okay, right. Next, out of pocket cost. Out of pocket cost means immediate cash outflow. Immediate cash outflow. So it is a portion of total cost which involves cash outflow. This cost concept is short-term concept and is used in decisions relating to fixation of selling price and decision make or buy. Out of pocket cost can be avoided or saved if a particular proposal and consideration is not accepted. So it is simply a cash outflow, immediate cash outflow. Next is shutdown cost. Shutdown cost means what? Even though the plant or the factory, okay, or the business is shut down for a temporary period of time, there shall be some fixed cost. Okay, there shall be some fixed cost. Let's say in corona period, lockdown period, some industries have been shut down. Okay, there are no activity, but still there shall be some cost which shall be incurred. Electricity fixed cost. Electricity variable cost is there. Electricity fixed cost is there. Factory rent is there. At least minimum security personnel will be there. Okay, so like this there will be minimum maintenance will be there. Okay, so like this there will be some costs which are shutdown costs. So even though the factory is shut down, even though it is closed for a temporary period of time, the inevitable costs are called shutdown costs. Next is sunk cost. Sunk cost means historical costs which are already incurred in the past. Now they are not relevant. For decision making. Costs which are already incurred, which are not relevant for decision making are called sunk cost. Okay. So let's say for example, in case of decision relating to replacement of a machine, written down value of the old machine is need not be considered. Okay. Next, absolute cost. Absolute cost means the cost of any product or process or unit in its totality after allocation. After allocation means what? Overheads, indirect expenses will be there. So that indirect expenses, overheads, everything will be there. So that overhead cost will be allocated to each unit cost. Okay, overheads will be so that is called absolute cost. It is present in a statement form. Various cost components may be shown in absolute amount and as a percentage of total cost or as a per unit cost or altogether. Okay. Next, discretionary cost. Discretionary cost means what? These are the costs which can be incurred, which cannot be, which need not be incurred. So just like advertisement cost is there. There is a development cost. You cannot correlate. You cannot correlate. Like input output ratio you cannot put for the advertisement. See, so you are putting the brand ambassador. Okay, Ramcharan as a brand ambassador. So by putting Ramcharan as a brand ambassador, how much sales has been achieved? That you cannot come. That you cannot tell. By making an advertisement cost of 1 crore rupee, how much sales has been increased? That you cannot calculate. These are discretionary costs. So whether you can make this cost or not, or whether you can put this cost or not. So these are the discretionary costs. So just like examples include advertisement, public relations, or executive trade. Let's say there is an entertainment cost. Entertainment cost means somebody is coming to your office or factory, visiting the factory. So you can ask them for water or tea or for lunch. Okay, so you need not offer. I mean, it is not compulsory. You need not offer them. So that is discretionary. That is discretionary cost. Okay, so hospitality cost. Hospital, how much hospitality you will give? So you will keep quiet with the water bottle. You will offer lunch. You will arrange another entertainment activity. Water. Okay, so that is what is called discretionary cost. And period cost. So period cost means the costs which are incurred in a particular period. Okay, particular against the receipt. These are the costs which are not assigned to the products but are charged as expenses against the revenue of the period in which they are incurred. All non-manufacturing costs such as general and administrative expenses, selling and distribution expenses are recognized as period costs. Okay, right. Next, engineered costs. So these costs that result specifically from clear cause and effect relationship between the inputs and outputs. Cause and effect relationship. That means this cost we are incurring means this output we are getting. So that kind of relationship we are able to establish means then it will be called as a engineering cost. The relationship is usually personally observable. Examples of inputs are direct material cost, direct labor cost. So examples of outputs are costs or components. If you are putting this input, you are getting this output. That is what is called engineering cost. Explicit cost and implicit cost. So explicit cost means out of pocket cost only, which involves immediate payment of cost. Explicit cost. Implicit cost means these costs does not involve any immediate cash. These are implicit costs. So which will not be required in the books of account. They are known as economic costs, implicit costs. So these are the different costs. Okay, which we have seen. So see what is that? Predetermined cost, which is nothing but an estimate. Okay, standard cost, which is a target cost. Marginal cost. Marginal cost means change. Okay, estimated cost. So estimated cost means it is a prospective cost. Okay, prospect prediction, cost prediction. Differential cost. When the increment increase in the volume or decrease in the volume, what is the next? Imputed cost, which is notional cost, which is not having outflow, but it is like opportunity cost. Capitalized cost means capital cost. Okay, capital budget. Product cost means in trading, purchasing, which is related to purchases, sales. Opportunity cost means sacrifice or the benefit which we are losing from taking this action. Okay, out of pocket cost means which is happening immediate capital. Short-term cost means even though you temporarily shutting down the operations, what is the cost you are incurring? Guaranteed cost. Okay, you are incurring, that is called short-term cost. Sunk cost means which is historically incurred. That means past. In the past you have incurred the cost, but still it is not relevant in decision making. Now it is not relevant in decision making. Absolute cost means which is the cost in totality, okay, after allocation. Next, next discretionary cost, which can be incurred, need not be, cannot be incurred. So those are discretionary costs like research and development, advertisement, like this. Period cost, which are revenue in nature and which are debited to the revenue. Okay, so those are the costs just like indirect expenses. Okay, engineering cost for which input-output relationship can be established. Explicit cost which needs immediate cash outflow. Implicit cost means there will not be any need for cash payment immediately. Those are implicit costs. So these are the different types of costs based on the usage by the managerial persons. Based on the usage by the managerial person. Right? Okay. So with this we have finished the classification of the cost. We have finished the classification of the cost. In that we have seen by nature of the element. Next by functions. By next by variability of behavior. Next by controllability. By normality. By uses by the management. So these are the different types of cost we have seen. Okay, right. So we have seen many words here like different types of costs. So far, what are the words we have come across? In the yesterday class of today's class, what are the new terms which we have come across? It may be marginal costing. Okay. Standard next. Standard cost next. Costing, cost accountancy, cost management, overheads, leadership, not cost. Okay, cost object. Okay, variable cost to fixed cost to semi-variable cost. Okay, so like we are saying like okay. So now we will go for a case study. Just we will observe the process. Just we will observe the process. We don't go for the technical test. We will just observe the process of the business. How the business will be operated. We will see the process. Simply we will take a product. This is a shirt we will take. So in that what are the activities involved we will see. So like we will see two case studies. Okay, where we will just observe the process. And then now we will come to the concepts again. We will discuss all the concepts of the chapter. And then later on we will open the same illustrations or case studies where we will recognize the or apply the terminology or the concepts which we have studied to the practical example. Okay, right. So we will open here illustration. Okay, so we will take up activities involved in shrimp processing unit. Activity involved in shrimp process. Shrimp means what? Real. Okay, right? Shrimp, prawns. Okay, and at the same time, we will take up another one which is very common, which is textile. Various process of shirt manufacture. Various process of shirt manufacture. Right. So in this, the first process is designing. First process is designing. Okay, right. So they are taking some designs. Like this, they are taking some measurements. Designs. Okay. So they have fixed the design. They have fixed the design. So now they are material procurement. So procurement of. So they are procuring the fabric. So in design, what will be involved? In design, what will be involved? Labor will be involved. Designs what to like what we call them. Who will do design? Fashion designers. Fashion designers will be. So those will be like those are the technical persons. So who will be making the design and all. Okay, design means it is like the what we call the fitting at the same time. At the same time, design on the product. Like it may be stripes or it may be checks or it may be a plain. What kind of texture it shall be? Texture means it shall be a cotton material or it shall be wool or it shall be any other nylon fabric or whatever fabric it may be. So there will be some design. There are lots of personnel involved, lots of research involved. Okay, so lots of presentations involved. Okay, so right, design. The next step is procurement. So procurement of the fabric. So procurement of the fabric also, there shall be a separate team. So that shall be in coordination with the designers. So what the designer is thinking, that has to be implemented. So with the better fabric code, it will be implemented. Otherwise, the result will be something different. So that's why we shall be needing a better procurement team, which shall be working in coordination with the design teams. It shall be working in coordination with the designers. So procurement shall be made. So for procurement, there shall be a research. So where it will be available. So it will be available in 3 or 4 different places. From which place it will be convenient for us to take. Convenience means what? Logistic convenience has to be seen. At the same time, our cost has to be seen. Both shall be taken care. So logistics has to be seen. So transportation, is the transportation easy from there or not? So it is viable or not? So after considering the what we call transportation cost, that means up to our factory all the costs involved, that has to be calculated and we have to take the decision. At the same time, we shall be taking care of the suppliers also. Like who are the suppliers? From where they are getting this product. Supplier has to be seen. Okay, from where they are getting this product. So there you see the quality of the product. So the quality will be depending on from where they are procured. Our suppliers procurement process is done, that has to be observed. See, let's say, so we have seen the shrimp process. So like shrimp will be exported outside India. Shrimp will be exported outside India. That means buyer will be in the country outside India. Okay, so they will come for audit. They will come for audit. So they will come for audit of the processing plant. They will not stop there. They will directly go to the supplier of the processing plant. That means what they are doing? They are coming to their supplier and going to the supplier of the supplier. Likewise, they will come. Okay, they will visit the plant. At the same time, they will go to the field also. They will go to the farms also, from where they are procured. So, like this, see, that means the procurement process is so much stringent, which shall be having many restrictions, that the proper care has to be taken, so that you will get the quality material at the best price, at the convenient way. Okay, so all these matters, right? So procurement process has to be observed carefully, fabric has to be seen, quality has to be seen, every cost has to be seen. Right. Next, after procurement, so you have to see the consumables. Consumables means what? Thread is there. Okay, buttons are there. Okay, for marking some various items are there. Decorative items are there. At the same time, some label kind of things are there. Scissors are there. Okay, so all these consumables which shall be used, okay, for manufacturing of a shirt are being purchased. So in procuring these items, there shall be a due care. There shall be a due care. So procurement. So procurement of main component or main material, at the same time other ancillary materials, consumables. So these are economically direct materials. We have seen indirect materials. Whether these will be called as direct materials, because these are very small in quantity, at the same time comparatively economically they are small. So that's why these are indirect materials. But still, in consumables also we have to exercise due care, because collectively it will be a material amount. Next, next here cutting the fabric as per the sizes. Cutting the fabric as per the sizes. Okay, so cutting process has to be exercised. After cutting, stitching has to be done. Okay, so in cutting also there are men involved, machinery involved. Man involved, machinery involved, material involved. See here, there is a tape, there is a scissor. Okay, there is a person working here. At the same time, there is other material on which he is placing. Okay, so likewise, there are machinery involved, man involved, other materials involved, consumables. Next is stitching. Next is the main process of stitching. Okay, so stitching is being done. See here, so there are many workers sitting there, so having each machine, so they are stitching. So here, so this floor is there, this has to be maintained, kept clean, so housekeeping shall be there. For each and every skilled worker, there shall be some surveyor, that means for a group. Okay, for each group there shall be a supervisor. Okay, for the entire batch, there shall be a manager. So likewise, there are many indirect employees working there. So these are the direct employees. These are the direct employees, direct labor, who are directly involved in the production process, direct labor. Okay, so other indirect staff are also there. Indirect employees are also there. So stitching the fabric. Next, so this is also a value added activity. So while analyzing this, so button also value added activity or without button you can how can select a shirt. So button and the logo. This is also a value added activity. Okay, anything which is non-value added that can be removed. So these are value added activities only buttoning and labeling. Next, ironing or pressing. This is also a value added activity. Ironing or pressing. Okay, so here also maintenance materials are there. Okay, so other indirect materials are also involved here. So next you see packing. Next you see packing. So here also packing, here also packing. So both packings are, one is for safety of the product, one is for transportation. Okay. Next you see retail showroom. Here also person will be working. See, retail showroom is our showroom. Manufacturer having a retail showroom. Then it is relevant. Otherwise it is not relevant. So if you are distributing and keeping on, then it is not relevant. So whenever the retail store is our retail store, that is when only it is relevant. So that means there are many materials, many infrastructures, many labor, many indirect materials, many indirect consumables are there in a particular process. Are there in a particular process. So likewise we will see other. Likewise we will see other shrimp processing plant. Okay. So here in this process, this is a complicated process. This is a complicated process wherein there are many activities involved, and the two products are not just restricted to one. There are various products. There are various products. Okay, see here, shrimp harvesting. That means, so in a pond, shrimp are cultivated. After cultivation, see, cultivation is not organized. So as a company, as a shrimp processing unit, what is our task? Going from harvest and getting the material from the harvest. That is our task. So okay, in live, we will go to the pond. In our presence only, harvest will be made. Okay, so fresh material will be dumped out, then it will be counted. See here, then it will be counted. So based on the count only, it will be purchased. See here, so there shall be a lot of skill which has to be exercised here, because material are there. No? Material cost will be based on the per kg material, per kg of prawns. If the 30 pieces are there, price is 1. Like price, let's say price is 500. If 50 pieces are there, price is 4. Based on the count, it will change. Price of the shrimp will change based on when the count is bigger, like the size of the piece is bigger, the price will be more. The price will be more when the size is bigger. When the size is smaller, the price will be so in that proportion, the rates will be opposite. At the same time, sometimes there will be some uniform rate for all the goods, like from 52 to 60. Whatever the count you are getting, 52 to 60, same rate will be there. 42 to 50, whatever the count you are getting, the same rate will be there. Likewise, there will be a range. Likewise, there will be a range. So if the farmer is selling 50 count, getting the rate as 43 count only, correct? Same rate from 43 to 50. 42 rate is different. Let's say this is 410 rupees. This is 420 rupees. Sorry, 400 rupees. 400 rupees. What is the count? Count means what? Count means what? So how many number of pieces per kg? This is nothing but count. Okay, so more number of pieces, less the cost. Less number of pieces, bigger the piece, higher the cost. Lower the piece, size of the piece is lower means lower the cost. Okay, so 42, 43 to 50, 4. So if the count is 50, the farmer still get 43 rate. If the count is 43, the farmer will still get 50 rate. So likewise you have to exercise skill. So when 43 you have purchased now, then you can get an output. If you are skilled, you can get an output as it is with equal to, as it is equal to 42. So that means you are having an advantage of 10 rupees. So likewise we have to exercise the skill. So here it is a counting at the, so based on the count only you will purchase the material. Okay, so there shall be a specified person, and that too our personal only shall be there. Our personal shall be there. Okay, so that means the person who is dedicated to the company, at the interest of the company, he shall work. Otherwise, they can loot a hell lot of money. Okay, right. So with the support of the person from the company, farmers can help. Enough. Right. Next. So after getting the material, ice will be mixed. Ice will be. Okay. Later, it will be loaded into the tractor, and then transportation will be made to the plant. Okay. Transportation will be made. See, all this will be a labor activity. Loading, unloading, harvesting, everything. Counting. Counting means the some person called as grader will be counting this. Person called as grader will be counting this. Okay. So transportation of the plant. So this will be washed, which is called field wash. Which is called field wash. So based on this, with using a machinery, it will be washed. Okay. So after washing, firstly the primary activity is removing the head. Remove the head, which is called deheading. Remove the head, which is called after washing, which is called deheading. So after deheading, so it will be graded. It will be graded. So that means, see, if you are taking the count means, if you are taking, let's say 30 counters, that means you have taken out 30 pieces. You have taken out 30 pieces. So all the sizes will not be uniform. Just per kg, you are taking out 30 pieces. In that, the small piece may be there, in that, this size big will be there. So totally it will be 30. Totally it will be 30. But it is not that all the pieces are uniform in sizes. So that's why what you have to do, you have to grade according to the size. So these type of small pieces are there, that has to be separated. These bigger pieces are there, that has to be separated. Medium pieces are there, those have to be separated. So likewise, we have to grade. Why you have to grade? All this is mixed, no? All the different sizes are mixed, that you have to grade. Why you have to grade? Based on the grade only, cost will be, selling price will be. So while grading, no, count will be the same, like count will be 21, 25. That means it will be ranging from 21 to 25. It will be ranging from 31 to 40. Likewise, grade will be there. What is the grade? Per count, how many pieces are there? See, obviously, you are taking out the head. You are taking out the head. You are taking out the head means obviously what will happen? Size of the piece will be reduced. Size of the piece will be reduced. And weight of the piece will be reduced. Okay. So if what will happen? That has to be, all the materials are mixed, not in uniform sizes, that has to be graded separately. So likewise, we will separate. So based on the grade, only grade will be, selling price will be. So whenever the higher size is bigger, rate will be higher, selling price is higher. Size is smaller, selling price will be low. Okay. At the same time, whenever you are handling, no, so see, even for removing the head also, labor will be there. For deheading also, labor will be there. So labor will be working there, and each and every piece will be handled. And okay, that means labor will be labor intensive industries. Okay, labor will be there. So they are removing. So they are removing the heads. So while removing the heads, so one labor, like one batch of the labor will perform in one way. That means there will be a difference in standards. There is a difference in actual yields. So out of 100 kgs, you should be getting 70. Okay, some people are giving 71 kg, some people are giving 69 kg. So there is a difference, right? Okay. Next, so this is what is the machine which is used for grading. See here, these are like some barrel-like items are there, no? Some barrel-like rods are there. These will be rotated. So based on the rotation, you will be catching the different sizes here. Okay, different beds will be there. So based on the grading will be there. And next, what is that? After grading. So value addition process will be there. Value addition. So what is value addition? So peeling will be made. Peeling means shell will be removed. Okay, shell will be removed by the workers. So each will be handled. Like each and every piece will be handled. Shell will be removed. Okay, by the workers. Okay, next it will be in this way. So that means all the shell will be removed. All the vein will be removed. Both the veins. On the top there will be vein. On the lower side there will be vein. All the vein will be removed. Everything will be removed. This is what is called, what generally it is called as peeling. Peel and deveined. Peel and deveined. So and this is there, no? This is PDT voltage. Why it is PDTO? P into D but time is, see here, time is taken. Okay, PDTO. So this is what? This is PDTO and skews. So like this, there are different value addition activities. Okay, so now let's see. This pieces will be cut into a butterfly shape. Butterfly shape. So like this, so based on the buyer requirement, this value add activities will be made in the company, in the processing. So these are value add. So the value add keywords, value addition. So value addition made by the workers. Value addition made by the workers. So now what is happening after value addition? This will be putting into a soaking machine. Soaking machine means some in the water, some chemical and the salts will be mixed and stirred for 1 or 2 hours, so that the material will be picked up, size will be increased and everything. It will get some shine also material will be. So after getting that, so it will be put in a belt. It will be put in a belt. So this is a different machine. This is a machine here. You can see this machine here. This is what is called IQF machine. This is called IQF machine. So IQF machine is there. No, this is individual quick freezer. That means whenever a piece is going into that machine, means it will be freezed. See, generally it is a perishable material. Perishable. So within 1 day it will be damaged. So whenever it is going into this machine now, it will be stored over 2 years. It will be stored for preserved for 2 years. Okay, that means on the piece there will be ice. Okay, right. So that is what is called IQ. So after, see here, it is an input. Right, this is output. See, likewise it will be. So after coming out from the machine, it will be like this. So passing through IQF machine, now IQF input. So it will be packed in this. It will be packed in this. At the same time, this is cooked IQF. Cooked means what? It will be going into the boilers. It will be going into the boilers. Directly going into the boilers. So directly going into the boilers means what? So whenever they are like buyer is there, so he can just heat it and directly consume. Heat it and directly consume. So like this is cooked. Cooked. Okay. Right. So this is a different variety. And see here, this is a block. This is a block. Block means what? So all the dehydrated or value added material will be kept in a particular box, and ice will be mixed with that, kept in a freezer. It will come out like a box structure. This is what is called block. It will be packed like this. So all this material, different variety materials are there. See here. This is different, this is different, and this is different. And in this also different sizes are there. And we are seeing this skewers also. Skewers also. This is also different. So this different packing is there. So all this is there. Okay, right. So this is there. So that will be stored. Cold storage. Obviously cold storage. Okay, that will be kept. So this is what is called cold storage. For this also, a different setup shall be there. A big structure shall be there. Storage capacity shall be there. Freezers shall be there. Okay, electricity connectivity shall be there. And the storage handling shall be done by a skilled staff. And different machinery has to be used because it will be kept in a different heights. But those heights, some machinery, forklift machinery has to be used. Okay, right. Next, it will be loaded in a container. Then it will be loaded on a vessel. Okay, from container to here, transportation will be made. So then it will be loaded in a vessel. Okay, then loaded in a vessel for what? Export. This is the process. So this much complication is there in this process. Why I am telling these things are like all these activities are known to me because I am an internal auditor for a processing plant. Okay, so daily I used to see. Daily means I used to go weekly, once in a week there. So I am responsible for 2 things. So what is the yield they are getting? What is the material yield? Material yield means what? 100 kg material they are purchasing. Out of 100 kg, how much is the yield? How much is the de-addition? How much is the value addition? That has to be taken. Like there will be an actual, there will be a standard. I will compare that. That is also we have a chapter called standard costing. In that we will have a formula. So based on the formula, we will get the yield. Okay. So if the yield is up to the mark, then we will keep going. Otherwise, we will blow this. So this is the batch. that in this we are expecting 70%. So out of 1000 kg crossing, 700 kg has to be come. But here only 600 kg, 65, 6500 kg only, 650 kg only come. Like that we will get to. Okay, so that is one thing. And the other thing is that internal audit function. Internal audit means every activity is not the technical activities, but the financial activity. Every financial activity has to be seen. Like all the tax related compliances are being made, company law compliances are being made, accounting norms are being followed or not. So like we will see everything. Okay, so both the functions will do. So this is what the process. This is what a complicated process. So whenever you are handling this kind of process, so how much care you have to take in each and every process, each and every process. So there is a different costing involved in each and every activity here. Correct? So whenever you are going for procurement, you will be going with a van, you should be going with ice, you should be sending your graders, 2 or 3 graders. Okay, they shall be exercising their skill and purchase. They are our personal need. Okay, they shall not mingle with the farmers and loot the company. That is one thing. Next thing it is coming to the water plant, and then de-heading has to be done. De-heading has to be done in a skillful manner. Correct? Skillful manner. Because if you are doing in a like water unskilled fashion, then what will happen? Your yield will be missed out. Yield will be missed out. Okay, so 1%, 2% difference means there will be lots of difference. Correct? And entirely. Okay, so likewise, so after de-heading, you have to grade it, and then grading also you have to apply the techniques. Grading also. See, this abroad is 43 we are purchasing. That means 50 count we are, sorry, 43 we are purchasing. That is at 50 count rate, correct? 43 and 50 are same rate. So that's why at 50 count rate you are purchasing 43. Okay, if you are dealing the material in a good fashion or in a skilled manner, then you take the advantage as 42 count, 40 count. Okay, so if you exercise the skill that you can do. So likewise, there are many materials involved, many labor involved. Materials will see different sizes will be there. You can purchase 30 count, 30 count, 100 count, 150 count, 130 count. So like is different. At the same time, whenever you are handling different counts, no, see 100 count you are handling. For handling 100 count, see 100 count is generally lower rate material, correct? 30 count or 20 count means higher count material, higher rate material. So it should be taken care properly. Higher rate material has to be taken care properly. This is one thing. At the same time, handling cost is there, no? It is relatively less for this because we have to handle just 20 pieces or 30 pieces. But for this, 100 pieces has to be handled. So in this, more labor cost is involved. It is vice versa. For the higher rate material, lesser labor cost. For lower rate material, so these are many different permutations and combinations where we have to keenly apply the costing here. So that you will arrive at a different cost reporting, so that you can have different decision making. Okay, right. So we'll see. So after knowing some other concepts, we will come again to this. So we will come again to this illustration, and then we will apply some technical to this process. Okay. So we'll start here, and then we'll meet tomorrow. Right? Good morning, guys. Right. What we have covered so far from the first chapter, cost and management accounting first chapter is there in the what we have covered so far. First, the definitions we have seen. What is cost? What is costing? What is cost accounting? Cost accounting, management accounting, cost and management accounting. So those we have seen. So later on, what we have seen, objectives of Cost accounting. Okay. So what are the objectives? What are the objectives of cost accounting? Ascertainment of cost. Next, determination of selling price and profit. Cost control, cost reduction, assisting management in decision that we have seen. After this concept, we have moved to classification of cost. So we have moved to classification of cost. So and that too, what are those classifications based on? Based on nature. Based on nature or element, there is a different classification. Based on functions, there is a different classification. Based on variability or behavior, there is a different classification. Based on controllability, okay, and based on normality, and based on the uses by the management. So the different costs have been classified. Next, what we have seen. Next, what we have seen. Segregation of semi-variable cost. So which is semi-variable cost, segregation into fixed cost and variable cost. That we have seen. Later we have seen two businesses. Okay, the process of the business, each and every process of the business we have seen in a shirt manufacturing company or organization, in a shrimp processing plant. So what will happen? What are the activities will be there? That we have seen. Okay. So whatever we have seen so far, and that what is the important point which we have to keep in mind. Those important points will be revised now. Later on, we will moving on to the next new concept. Okay, right. So far, so we have seen the definition of cost and costing. So see here, introduction we have. So this is the material which will be in your hand later on. Okay. Right. So, introduction you see here. So imagine, can you see that? Yes. Imagine you are running a small bakery. You sell cake for 300 each. Okay. So at the end of the month, you made 60,000 rupees. You made 60,000 rupees at the end of the month. So you made a profit. You made a profit. You cannot say. Okay. So your performance is good. You cannot say. So it is known only when you compare it with the total cost. Okay, so 60,000 rupees means it looks great, right? But wait, do you know how much profit you really made? So did you consider the cost of the flour, main ingredient, sugar, ingredient, electricity, rent, staff salaries and packing? So all these are common costs. If you don't track these costs properly, you may think you are making money, but actually you may lose money. Actually, you are correct, working good or not, you don't. So this is where cost and management accounting steps in. So where you will record each and every item of the cost, where you will classify the cost into direct, indirect, okay, or which is relevant to this department or that department. Like this, you will classify the cost and you will analyze the cost, which will help in taking the better decision. So that will better decision for pricing the or cutting the costs, controlling the waste. Okay. So in this chapter, okay. So every business decision revolves around the cost. So should we launch a new product or continue the existing product, or should we reduce the price or improve the quality, or should we automate the production or continue the manual? So all this will be answered with the help of a good cost accounting system. Good cost accounting system. Okay, so without knowing the cost structure, manager cannot control the expenses or maximize the profit. Okay, so now this chapter builds the foundation for the entire costing subject. Okay, so everything else will come later on. So this is the basic foundational chapter. So everything else means it may be material, or it may be labor, or it may be overheads, or it may be process costing. Whatever it may be, it will start later only. So this is the basic fundamental chapter. In this chapter, what we will study: meaning, objective, and importance of costing. Next, role of cost accounting department, installation of cost accounting system. Okay, difference between cost, financial, and management accounting. Okay, next, elements and classification of cost, segregation of semi-variable costs, cost reduction versus cost control. So methods and techniques of costing, digital costing system, Okay, so these are the key objectives. In this, what we have covered so far, meaning, objectives, and importance we have covered. Okay, meaning, objectives, importance we have covered. Next, this we have seen. What is this? Elements and classification of cost we have seen. Next, segregation of semi-variable cost and into fixed cost and variable cost we have seen. Cost reduction and cost control we have seen. Okay, right. So we'll see here meaning, objective, and importance. So example given here. So a textile company wants to compete with cheap imports. Okay, generally somebody is importing from other country and doing the business, they are having a cost advantage. So we want to compete with that. Knowing the exact cost per meter of a cloth. Okay, then only we can have a better decision making and competitive advantage. Without knowing that, we cannot do. So that's why, okay, without cost data, company may underprice, okay, or overprice. Underprice or overprice. So that you can lose the cost leadership or cost advantage or cost competitiveness. Next, role of cost accounting department. So role of cost accounting department, it will monitor material wastage. For example, it will monitor material wastages, energy consumption, and labor efficiency. So it will report to the management action for the control. So example, in a steel plant, it will happen like. Next, installation of cost accounting system. So a new automobile factory must set up cost records, cost recording formats, overhead distribution methods, inventory control before production begins. Otherwise, so it will feel difficulty in cost reporting. Okay. So difference between cost, financial, and management accounting. So you see here cost accounting, financial accounting, and management accounting. So the financial accounting which results in the entire financial performance of a particular financial year for a particular period. Cost accounting means per unit cost to per unit selling price, per unit profit. Management accounting means making the decisions based on the cost records of financial records. Okay, making the decision based on the cost records of financial records, based on the cost data. See here, total profit of the bakery is 1 lakh. So this is what is financial accounting. So cost accounting will tell you cost of the cake and selling price of the cake per cake. Okay, profit per cake. So this is what is cost accounting. And management accounting means should we expand by opening another branch or we outsource the packing? So likewise we will make decisions. This is what is management accounting. This is the clear difference. Next, classification of the cost we have seen. Okay, so classification of material cost and labor cost, other expenses. So material also direct, indirect. Likewise we have seen labor also direct, indirect, expenses also direct, indirect. All the indirect material, all the indirect labor and indirect expenses will be termed as overheads. In that overheads also sub-classification is there. So what is the factory overheads or structure overheads? Next, administration overheads. Next, like this. So with respect to the bakery, floor and sugar are the material costs. Okay, direct material. Chef salary is labor cost, direct labor. Okay, oven electricity is expense. Okay, expense that to direct expense. Overheads. So useful for pricing and budgeting. Okay, classification of cost. Next, segregation of semi-variable cost. So electricity bill in the bakery will be obviously fixed and semi-variable only. Up to a particular level, fixed will be there. After that, per unit charge will be there. That is variable. Okay, and variable also step variable. Then you can find it. So up to 100 units, this will be the charge. Per unit charge is this much. More than 100 means per unit charge will change. So based on the consumption, it will change. So step variable it will be there. So likewise, those variable cost, semi-variable cost will be segregated into fixed and variable cost. So that you will understand the cost price per unit. Okay, in detail. Next, cost reduction, cost control. So generally, what is cost control in the existing conditions? So you can control the cost, optimum utilization of the resources. Thereby, you can control the cost. So maintain sugar usage at 1 kg per 5 cakes is a standard. Okay, so when you will compare with actual, then you can control the cost. Okay, next, cost reduction. Cost reduction means negotiating the bulk discount with the supplier to lower the sugar price, or you can change the supplier also. You can have an alternate option of the suppliers. So that is what is called cost reduction. So even you control the cost also, there is a chance for reduction of the cost. So cost reduction. So next, methods and techniques of costing that we will see. Different methods and techniques of costing. Digital costing system. This also we will see. So these are the learning objectives of this chapter. So what are the main learning objectives? Meaning, objective and importance, the role of cost accounting department, installation of cost accounting system, and elements and classification of cost, segregation of semi-variable cost, cost reduction and cost control, and methods and techniques of costing, digital costing system. So these are the objectives of this chapter. So out of this, we have already studied some like meaning and objectives we have seen. Cost reduction, cost control we have seen, segregation of semi-variable cost we have seen, classification of the cost we have seen. Okay, and this also we have seen. I think what differences between cost based financial management and management accounting. This we have seen. Okay, so far, right. So in that we will see important points. So meaning and definition. The cost we have seen. What is the meaning of cost we have seen? What is the meaning of the cost we have as per our discussion? So what is the resources which we are giving out for getting a product or getting a service? It's called cost. Okay, sacrifice of resources. It may be money, it may be material, it may be time, it may be effort. To get a product or service is called cost. So it can be used in two ways. So as a noun, as a verb. So okay, so as a noun means what? It is nothing but amount spent on making or obtaining a product or obtaining a service. So this is what is noun. Verb means what? The process of arriving at the cost is called is generally a verb. Okay, how much it costs. Evaluation of how much it costs. Finding out how much it costs is a verb. Okay. Next, costing means what? The technique or the process of ascertaining the cost of a product or jobs or services is called costing. Okay. Next, so purpose, it helps the managers plan, control activities and take decisions about the future. Next you see what is cost accounting. Cost accounting means accounting for costs from recording. It will start with recording and ends with reporting to the management. Management will take decisions based on the costing data. Okay, so it provides periodic cost statements. It may be weekly or monthly or annually or half yearly. Okay, check if the costs are under control or not. So monthly report. See here, with respect to the bakery, material cost per cake is 100, labor cost 50, overheads 30, total cost 180 rupees. So then you can sell it at 200 rupees. So likewise, you will be having an informed decision. So based on the cost data, management can compare with the budgeted cost. Say it is 170 rupees. So 170 rupees is the budget, but actually we are incurring 180 rupees. So how can we cut down this 10 rupees? That decision can be taken by the management by looking at the alternative options. So in the entire production chain, process chain. Next, cost accountancy is nothing but costing plus cost accounting principles plus techniques for cost control and profitability analysis and decision. Okay, next, management accounting. Accounting plus financial management is called management accounting. So it is an integral part of management functions. So it will help the management in 4 points. See here. First, planning. Next, organizing, controlling, and decision making. So how the planning will be done? How the planning will be done, you see. Management accounting prepares cost benefit analysis. Okay, sales forecast versus additional cost and supports the decisions on expense. See, planning means putting a budget. Okay, budget. So based on the budget, you will target the cost. Okay, you will target the cost. Then you will compare and then control. Compare and then control. Finally, you make a decision out of it. So this is what is called management accounting. Next, cost management. So collecting information, analyzing the information or cost data, presenting the data to plan, monitor and control costs. Step by step here it is given. See here. Okay. At a later stage you will find. Okay. See, hospital implements cost management to track per patient treatment cost, compare with insurance reimbursement, and identify areas to reduce the waste or reduce the medicine stocks. Actually, this is there, no. So the patients who are coming to the hospital will be having insurance. So generally, hospitals will deal with the patient. If he is having insurance, the bill will be different. If he is not having insurance, bill will be different. Okay, so based on that, what is the coverage? So let's say he is having an insurance coverage of 2.5 lakhs. Okay, the bill will be 2.8 lakhs. Okay, so after covering the insurance, they will charge again 30,000 rupees to the patient. Okay, so if the same kind of treatment, so if they want to undergo in the same hospital without insurance, if they go, means it will be 1.2 lakhs or 1.5 lakhs. It will be 1. This is true. This is actually happening practically. Okay, so likewise they also do cost benefit analysis. So how they will do cost management to track per patient treatment cost, compare with the insurance reimbursement. Okay, and identify the areas to reduce the waste. Okay, right. Next, objectives of cost and management accounting we have seen. In this ascertainment of cost we have seen. In this ascertainment of cost we have three elements. One is accumulation. Okay, next assignment. Okay, assignment. Next ascertainment. So these are the three elements. So ascertainment of cost. Ascertainment of cost is nothing but calculation of cost or finding out the actual cost on a particular item, on a particular department, on a particular product. So like this. Next, determination of selling price and profitability. So with the use of costing system, you can determine selling price and profitability. So when you know the cost, you can fix the selling price. Okay. At the same time, profitability also. When you know the cost, then only you can fix the profitability. Okay. So and it will help in negotiation also. How it will help in negotiation? So whenever the cost is increasing, okay, you will go to your supplier and you talk to the supplier that this is the cost we are incurring now. So if we are purchasing our raw material at this price from you, so it will not reach us. So we are not having margins. Okay, we will go to the supplier and we will renegotiate. Okay, prices. So in that way, it will help in fixing the selling price, fixing the profitability, and doing the negotiations. Okay, and closing the deals. Right. Next, cost control we have seen. Cost reduction we have seen. Cost control means what? Under the existing conditions only. Lowering the cost. So discipline in spending, meaning cost control and discipline in spending. Compare the planned standard versus actual. Find deviations and correct them. Okay. And next, cost reduction. So regarding cost reduction, so these for cost control, these are the steps. So first we have to set a target or standard, measure the actual, compare the actual and standard, and analyze and take action. So this is the process. And cost reduction means what? It is a permanent reduction in the cost per unit without reducing the quality or usefulness. So no cost is lost. Always there is a scope for improvement. That means innovative change has to be brought. Okay. So for cost reduction. So identify. See, this is how it will be done. Identify the value added activities and non-value added activities by analyzing the value chain. Okay. So value chain is nothing but what? Observing the process from end to end. From starting to ending. Okay, from procurement of the raw materials to ultimately procurement of the raw materials to ultimately what? Till the production of the finished goods. Okay, so those processes will be observed, and each and every process will be analyzed whether it is really necessary for us or not. So it is necessary, but at what cost it is necessary, that we have to check. So whether we are paying extra or not. So likewise we will check, we will identify value added activities and non-value added activities. Non-value added activities, if you find any, means that we will remove. Thereby we will get the cost advantage, which is nothing but cost reduction. Okay, so value chain analysis 2. Continuous research and improvement. So for better find the better methods, materials and technology. So instead of using a coal in let's say a power plant is there. For power plant, okay, so for generation of electricity, we will use the coal as the fuel. Okay, so instead of using the coal, so whether diesel or petrol or kerosene is a better option or what, we will check. Okay, so likewise, so maybe changing the technology or maybe changing the material we use. Okay, so instead of purchasing from a particular supplier, we will go for another supplier. So likewise, we will take a decision. So continuous research and development on every element of the cost has to be made. So thereby you will get a cost reduction. Next, so for doing cost reduction, three conditions are necessary. What is that? How much we are cutting down? That there is a measurement. And next, is it permanent or not? Okay. Next, it shall not be one time. Okay, it shall not be a one time advantage. So it shall be permanent and quality remains same or improved. Okay, same quantity. So you cannot compromise on the quality. So quality shall be improved. So if these conditions are satisfied, then only it can be treated as a cost reduction. Okay. Next, assisting management in decision making. See here. So these are the steps. So already we have seen now this point there. So these are the steps here. So planning, the implementing, controlling, evaluating. Planning means what? Budgeting for the next year. So budgeting and then putting the target. Okay, we want this much of profit, we want this much of sales, or we want the product to be in this cost range only. So based on that, we will put target. How we will put target? So based on the each and every process, each and every department, okay, each and every product. So from this product, there shall not be cost more than this. From this department, there shall not be cost more than this. So likewise, we can put a target. So then you will control, then you will evaluate. Okay, so identify the wastages and profitability of the products. Then you can evaluate. Right. So difference between cost control and cost reduction we have seen. So maintaining the cost in accordance with the established standards is cost reduction, and attaining lowest possible cost under existing conditions. It is a past and present data and preventive function. It ends with the target when the targets are achieved. So cost reduction is a never-ending process. Once we reach a particular target also, then also we will try for another innovative method in order to reduce the cost. So reducing cost, it challenges all the standards, endeavors to improve them continuously, and change will result in a lower cost. It is based on the present data for future, and that too it is a corrective function. Okay, we will analyze all the value chain elements, and then we will correct each and every element. So cost reduction has no visible end. There is no end for this process. It is a continuous process. It is a continuous process. So next, roles and functions of cost and management accounting. So this we have to study later. Okay, so we are now just revising what we have already studied. Okay, right. So now we are moving to what we call classification of costs. Yeah, see here classification of cost. So classification of cost means grouping of cost based on the common characteristics to understand, control, and analyze them better. It helps in preparing the cost sheets, decision making, and budgeting. Okay, right. So in this, okay, so costs are generally classified on these basis. So these are the 6 bases. First one, nature or element, by functions, by variability or behavior, by controllability, by normality, by cost for management decision. So based on the nature or element, what are the classification? Material, labor, other expenses, overheads. Overheads. So in this overheads also, sub classification is there. This we have seen. Correct. Next, based on the functions. Based on the functions, what are the classification? What are the classification? Production cost or manufacturing cost, or factory cost. Next, administration cost. Next, selling cost. Next, distribution cost. Next, research and development cost. So these are the 5 classifications based on the functions. Okay, what are the production cost or manufacturing cost? Next, administration cost. Next, selling cost. Next, distribution. Next, research and development. Next, based on the variability or behavior, variability or behavior, what are the different types of cost? Based on the fixed cost, variable cost, semi-variable cost. Okay, so we have seen the nature of the fixed cost, variable cost, and semi-variable cost. What is the nature of fixed cost? It is unchanged. It remains unchanged for any level of production or any level of sales units. Okay, variable cost is something which will not change on per unit level. Okay, so semi-variable cost means which is not fixed, which is not variable. So you have to check whether it is semi-variable or not. How you will check? First of all, you will check for fixed cost, whether it is same for every level of activity. That you have to check. Later on, what you have to do? Later on per unit basis, you have to check whether it is same for all the level of activity. So if these two are not working, then it is semi-variable cost. Then you can segregate the semi-variable cost. So how you will segregate? For segregation, you will have different methods. Okay, for classification. High-low method is there. Analytical method is there. Next, by period comparison by period, it is the next. Lastly, least square method. Okay, right. So see here. Direct material. See, in this, by nature or element, we have material, direct material, indirect material. Direct material, indirect material. Next, labor also we have direct labor and indirect labor expenses, other expenses also. So we have direct expenses and indirect expenses. All the indirect material, indirect labor, indirect expenses are called overheads. These are subclassified into production overheads, administration overheads, selling overhead, distribution. So everything you will be having example here you see. So steel in making the cars, cloth in dressmaking is the direct material. Okay, lubricants for the machinery, cleaning supplies. Okay, so all these are indirect materials. Next, workers directly engaged in production like carpenter making furniture is direct labor. Supporting workers like supervisors or cleaners or security guards will be indirect labor. Special hire charges for machinery for a job will be special hire charges, will be direct expense. Will be direct expense. Next, production overheads means factory rent, factory electricity. Administration overheads, example, office rent, telephone bills, internet bills, everything. Salary of an accountant, like this. Selling overheads means advertisement, sales commission, okay, marketing team salaries, like this. Packing, loading, transportation charges for delivery to the customer will be distribution overheads. Next, by functions, production or manufacturing cost means costs of converting raw material into finished goods, direct costs. Okay, at the factory. Okay, next, administration cost. Generally in office, these expenses will be incurred. Cost of managing the business. Next, selling cost. Cost to promote and sell products, which is advertising cost. Okay, advertising cost. Next, cost of delivering the goods to the customer is transportation cost, distribution cost. Cost of the product innovation, research and development cost. Research and this is a discretionary cost we have seen. Advertisement cost and research and development cost and hospitality costs are discretionary costs. There will not be any there will not be any question whether we incur or not, and that too there will not be any direct input output ratio. So if you are incurring this much of cost in advertisement, you cannot directly say that. So this is the benefit from that. So likewise, it is a discretionary cost. Okay, right. So in a shoe company, leather purchase is a production cost. Manager's salary is administration cost. TV advertisement is selling cost. Delivery van fuel is distribution cost. Okay, right. By variability or behavior, fixed cost, variable cost. So which do not change with the production level within a range. Which do not change with the production level. That means whether you produce 100 units or 500 units, factory rent is the same. Next, change in the direct proportion to production level. Direct proportion to production level means, so how much the production is changing, so that much the unit price is changing. So that is what is called, variable cost is changing. Total variable cost you have to see. So total variable cost you have to see. So variable cost per unit means it will not change. It will remain constant, same. Okay, so that is what is called variable cost. So raw material cost, more units, more material cost. More units of production, more material cost. So that is what is called variable cost. Next, semi-variable cost. Semi-variable cost contain both fixed and variable parts. Electricity bill is there means fixed meter rent plus variable usage. So methods to split semi-variable cost: high-low method, analytical method, comparison to period or activity, least squares method. Okay. So high-low method, what you have to do? Highest activity. So see, this method will be used whenever there is sales value given. Sales value given. So in high-low method, what you have to do? Difference in the cost you have to take out. Okay, difference in the sales value you have to take out. So on that, what is the ratio you have to find? So that is what is called degree of variability. Degree of variability. Whenever you are getting degree of variability, let's say it is a 20%, that 20% will be on sales. Variability will be on sales. Then you will get variable cost. If you are getting variable cost, from total cost, you remove variable cost, you will get fixed cost. Okay, right. Next, based on controllability, controllable cost and uncontrollable cost. But generally, all the costs are controllable costs only. Okay, but based on the person, so it will change. So for a particular person, some costs are controllable, some costs are uncontrollable. Okay, based on the person, it will vary. So can be influenced by a manager. Example, direct materials cannot be influenced by a specific manager. Allocated head office rent. Okay, allocated head of the rest. So that that cannot be controlled by the branch manager. So that's why that is uncontrollable to a branch manager. Rent is uncontrollable to a branch manager. Material is controllable to a branch manager. Okay, but rent is controllable to whom? A CEO. CEO of a company or CFO of a company or MD of a company. So it is controllable to MD, it is not controllable to branch manager. So like this. Next, based on normality, normal cost, abnormal cost. Normal costs are incurred at a normal production level. Abnormal costs are generally not normally incurred, just loss due to fire, loss due to accident. Okay, so like this, abnormal cost will be there. Next, by cost used in the managerial decision making, predetermined cost means estimated cost in advance. Standard cost means what? Predetermined based on the efficient operations used for various analysis. Standard, see here. So standard cost is there now. So standard costing means standard cost is there. Okay. So see, we have a separate chapter for standard costing. Standard costing. So where you will analyze the variances. Where you will analyze the variances. Let's say material cost is there. Okay, material cost is there. So you want to purchase the material at rupees 50 per kg. 50 per kg. Okay, so you want to purchase, you want to produce 10,000 units. 10,000 units. Okay, 1 unit is equals to 1 kg. Okay, 1 unit is equals to 1 kg. Okay, so this is what is the budget. Okay, so now in a year after the production, you have produced 12,000 units. Okay, produced 12,000 units at rupees 49 per kg. At rupees 49 per kg. So is there any variance in this? Is there any variance? Variance is there or not? So let's say, see if this is the case means, what is the standard we kept? Standard what is the standard? 10,000 units into 50, which is nothing but 5 lakhs. So 5 lakhs is the budgeted material cost or standard material cost. Okay, what is the cost now? What is the cost now? 12,000 into 49. 5 lakh 88,000 you are getting. This is actual material cost. Actual material cost. These two can be compared. These two can be compared. These two can be compared. See, we are putting a standard for material cost. We are putting a standard for material cost. So directly you can compare. Units are different, no? Units are different, no? See here. So if you compare like this directly, 88,000 difference will come. Okay, otherwise see here. Actually 12,000 units got produced. Then what will be the revised standard for this? What will be the revised standard for this? 12,000 into 50, which is 6 lakhs. But 12,000 units got 49 rupees, which is 5 lakh 88,000. So which is 12,000 rupees favorable. Favorable, correct? Here what is this? 88,000 advance we are getting. So whenever you are keeping a standard, so you have